Declines far outstrip advances as mid-caps come under severe selling pressure, even as heavyweights notch some gains. Realty and industrials are the big losers, while IT and financials manage some green.
JSW Group Chief Sajjan Jindal tells CNBC-TV18 he expects some indication on steel safeguard duties from the government in the next 15 days. On the EV front, he expects the launch of a made-in-India car in the next 18 months.
Axis Bank CEO Amitabh Chaudhary tells CNBC-TV18 there is a risk of stress spreading to secured book from the unsecured book with regulatory tightening. Also doesn't see a rate cut spurring growth.
US President Donald Trump has indicated that he might impose a 10% tariff on imports from China from the 1st of February. The fear of tariff action prompts India to accept the return of nearly 18,000 illegal immigrants. Good afternoon, you're with us here on Halftime Report on CNBC-TV18. I'm Hormas Fatakia. With me as always is Banglam Malu, and a similar script playing out. The indices are off the highs of the day, but the pain though is in the broader markets, and that is courtesy some extreme earnings reactions. That was the case yesterday as well, and that's following into today's session as well, Banglam.
Take that point entirely, Hormas. When the frontline indices underperform for a while and they see a bit of a selling pressure, you typically blame it to the flows. You say, okay, there is relentless FII selling, etc., all of that. But when it's broadening out like that, and the nature of the stocks which are declining have to do more with the kind of earnings reactions that we're seeing. I was just looking at some of the top Ethanol losers today. We had a bunch of them. Top Ethanol losers today would be something like an India Cements, which is down in double digits. We have a big cut coming in on IndiaMART, ICICI Pru, persistent ahead of numbers, and real estate stocks. All of them are under pressure. So typically, it is a bunch of earnings reactions which is leading to this decline, because there are some good earnings that have come by. We'll talk about that, and there the stocks have seen an up move as well. So this is more micro than macro flows related picture, and that does not look very good. And as a result of which, we've seen the Nifty move back into the red as well from just the highs of the day. And typically the mid caps are a teller of what the big caps are likely to do. If the mid caps outperform, that means the lower end of the big caps are actually supported. But now if the mid caps are down, underperforming, that means the lower end of the broader caps or the bigger, indices is also not supported.
Not supporting at all. A 1,200-point cut now on the mid-cap index, almost 2.5% down on the small-cap index as well. You have to pull up Tanla Platforms. That is one stock that is also having an earnings reaction today. 6.5% lower on that stock as well. And it's down almost, it has almost halved from the peak that it had made, which was around 1,200 or so in the near term. And Sterling and Wilson is the other one. And that stock too is facing some bit of pressure in today's trading session. And that stock is down more than 55% from the peak that it had made of 828. From there, the stock has now collapsed to 366 as of now. At the lowest point of the day is Sterling and Wilson. But we'll talk about a lot of these broader market losers all through the show, because there are plenty of them. But we'll start off with some more earnings reactions, and ICICI Prudential is one of them, and that is declining on the back of its third quarter results and subsequent price target cuts that have also come from brokerages. Vamakshi is here to list out more on that. Vamakshi, good afternoon.
Well, good afternoon, Hormas. A weak set of numbers coming in for ICICI Prudential. When we look at the new business premium, that was up nearly 53.5% at 6,441 crores. The total APE saw an uptick of 27.8%. This is more or less in line with what the street was expecting, with the big hit came on the VNB margin front, because that has come in much below what the street was expecting. Now VNB margins have contracted from 22.9% to 21.2%, and resultantly it has led to a miss on the VNB as well. VNB is up 18.6% at 517 crores. Largely we have a couple of brokerages as well that have come out with their outlook on their numbers. HSBC, who has a buy rating on the counter, has cut its target price from 825 to 780. We also have another note coming in from Morgan Stanley. They have an equal weight rating on the company with a target price of 695. They have gone ahead and trimmed their VNB forecast by 2% from FY25 to 27, following the miss on margins. And lastly, we have a note coming in from Macquarie. They have a neutral call, target price of 725. They say that VNB margin growth has disappointed yet again this time around. Higher ULIP, declining savings and higher costs have impacted the margins, and downside risks are seen as far as FY25 estimates for VNB are concerned. So overall, not a good show for ICICI Pru.
Not a good show, and the stock is reacting understandably as well, down 8% right now. The other stock which is reacting to not a good show in their third quarter performance is IndiaMART. Among the top losers once again today. Rima joins in with the earnings, fine print, brokerage views, and what exactly is causing the pain?
Well, the stock is now at a fresh 52-week low, having fallen 18% in the last 1 year and more than 30% from its recent 52-week high. The problem in the numbers was the quarterly paid subscribers has fallen by 3,700 on a sequential basis. The estimates were that the quarterly paid subscribers would grow by 2,000. So, a couple of years back when things were growing well, the quarterly paid subscriber addition used to be 5,000 to 6,000. This came down to about 2,000. But this is the first time in many quarters we've seen a decline on a sequential basis, and it came in as a negative surprise. The company said this is on account of the focus of the company to focus on the better quality customers and to the holiday season. Nomura has downgraded the stock to a reduced. The target price slashed to 1,900. The core business is now valued at 20 times versus 30 times earlier. And it's also now being valued at a 50% discount to an info edge. Motilal Oswal, on the other hand, has a bullish call on the stock. They have a buy rating, target price 2,600. They've lowered the target price, but they still have a buy rating on undemanding valuations. Back to you.
Subscribers has been a pain for IndiaMART over the last few quarters, and it's showing up in the price. And now it's still down almost 30% from its peak, which was close to around 3,200, 8.5% lower on IndiaMART. Time for a short break on Halftime Report. Corporate conversations on the other side. We connect with Ajay Kanwal, who is the Managing Director and CEO of Jana Small Finance Bank, to discuss the quarter gone by. Stay tuned. Back with us here on Halftime Report. Just before we went into the break, we were talking about extreme earnings reactions on the downside. But one such stock that is bucking the trend and is doing very well after its third quarter numbers is Jana Small Finance Bank. Now, the company also said in its earnings call that the worst of its asset quality issues are behind. Now, to discuss this and a lot more, we have Mr. Ajay Kanwal, who's joining in, who's the Managing Director and CEO of Jana Small Finance Bank. Mr. Kanwal, good afternoon. Thank you so much for joining in. And I start off with what you mentioned in your earnings call, which is about the asset quality issues being behind, now the worst of it being behind. Does that also mean that slippages will now see a reduction from here on, or will they continue to remain higher than the historical average?
So first, good afternoon. Thank you for having me on your show. We certainly would see the slippages coming down. But see, here is the important thing for all viewers to know about Jana Bank. 68% of our book as of December is a secured book, largely property backed. So fundamentally, even if there is small slippages on the secured side, it's a matter of time when you get your money, and it doesn't become an issue in terms of it causing a loss to the bank. Our challenge really on the asset quality was in the microfinance business, which is now at 32%, where we had seen stress in the industry, and which is where we saw elevated flow-throughs in the first two quarters. It's come down in the third quarter. I must also add that microfinance collection still continues to be a hard work, which will continue to focus.
All right, we take that point. But, what was very interesting, apart from everything that you said, and I noticed this, is that you called it Jana Bank. And this, when the stock market calls it, and the name of the company is Jana Small Finance Bank. And that leads me to the question, are you looking to apply for a universal banking license? I mean, will this be Jana Bank instead of Jana Small Finance Bank?
So first, I've made sure that small finance is very visible behind me. So
yes, but when you said it, maybe it's a Freudian snip.
I'm hoping so, but listen, it'll be absolutely our full efforts to apply for a universal bank. You know the conditions which RBI has published. The one condition which we are doing our best to meet is to ensure that gross NPA and net NPA remain below 3% and 1% respectively. It does cause us to put additional provisioning because the year we are supposed to meet it has seen an MFI stress year. So it's a bit of a difficult moment. But touch wood, the business is doing well. We're able to provide for the accelerated provisioning, as we call it, to make sure that net NPA remains below 1. And we have been doing it for the last 3 quarters now.
So what are the other parameters that are left now, and how long before we hear that application going in?
So all of the parameters have been met. This one we have to meet for 2 years in a row. We met it last year. We meet it this year, then we are eligible to apply. As you know, it's not an automatic process, our eligibility, and then it's a decision for the regulator and the committee which has been appointed recently, which will decide whether Jana should get one or not. But we fundamentally are, in our minds, very clear that we will certainly apply for it.
So first quarter FY26, thereabouts.
That's right. So audited results in April, and then application by May.
Right. You know, Mr. Kanwal, you mentioned in your earlier answer that microfinance collections still continue to remain a challenge. For how long do you expect that to continue, sir? And what's the situation on ground right now that you are witnessing?
So for us, the challenge is very simple. Normally, you would hit 99% close to the 20th or 22nd of the month. Now we hit 98.5, 98.6 by the 30th of the month. So by which I meant that, yes, the book has stabilized, but hard work will continue. It's not, like it was in the fourth quarter of last year, where doing 99% by 22nd of the month would have been like, okay, we are more or less sorted out. Here we are fighting to the last minute. And I think there has been some noise, obviously, within the industry, between employees, between various institutions. So it's not still back to the way it used to be. So I do think this will continue, which means hard work at our end till the last day of the month to get everything right. I suspect will at least be this quarter and possibly next quarter too.
All right. So, we'll take it as a given that your ratios, the net NPA and gross NPA, will remain below 3% and 1% respectively, currently at these levels itself. I just have a two-part question. One is on your advances growth. What do you project for the end of this year and the next year as well? And the second part is on NIMs. And the reason why I ask you about NIMs is because they've reduced both year on year and quarter on quarter. And we've spoken to a lot of financial institutions, banks, etc. They are, seeing the turn of the rate cycle sometime in the next couple of quarters. If that were to happen, that would put further downward pressure on the NIMs. So what is your outlook here? Where do you believe that, the NIMs would sustain? What the base would be here?
So Mangalam, thank you. So first question, very important and very relevant. Our growth in secured book, which is affordable housing, micro lab, MSME, gold loans, that is about 29% for the year in the first 9 months. So we should finish in the 35+% growth for the year in secured book. Our unsecured book first 9 months has been minus 11%. Let's say we end up with minus 11% for the full year. Then the overall growth this year will be about 20% growth in assets. We had given a guidance earlier that we'll grow 20% assets and 20% deposits. So we'll meet that guidance for sure. Our bias is to give a similar guidance for the following year too. And which is what we said in the analyst call, that at least while we discuss ROAs and ROEs and PATs, we certainly are in our mind very confident that we will grow assets and liabilities at a 20% clip. But for us, 20% asset growth has to be more secured than unsecured. We have clearly said that we would like to reach 80% secured asset book. From a 0, we have reached 68 as of December. We would like to get to 80.
And by when do you expect to get to 80, sir?
I would give ourselves 2 years of hard work to get there. But touch wood, the book that we have built, which is very organic in nature, has seen a COVID test, gives us comfort to go towards 80 using the same books, small ups and downs by geographies or some small changes here and there will continue happening. On the unsecured side, Mangalam, we have started CGTMC and CGMFU. So while we are cautious and we are careful and we are not growing very fast, we have never grown very fast. I do want to take away any tail risk that may come out from any unforeseen moment also. And for that, while it will cost us, we certainly will put into CGTMC and CGMFU. We have started the first bunch, roughly about 1,200 odd crores out in my unsecured book. I've already put under the guarantee programs. Not to your NIM. Is it okay if I go to the NIM?
Yeah, please go ahead, sir.
So NIM, good news, it's 7.6, sorry. The only gap is from the 11% drop in unsecured book, which has got a higher NIM, because that has dropped it has become 7.6. And in fact, in our investor deck, we have shown that even if my book as of December in unsecured would be the same as March, forget growth, just identical, my NIM would have been 8%. So good news. One, the asset NIMs are holding up very well. Second, once we come back to a normalized moment in unsecured, we will go back up on NIMs. We'll also go back in cost income, because cost income has got challenged because, some amount of revenue, obviously, which should have come, has not only not come, but some we have lost also because of unsecured. So I think cost income will get better. NIMs will get better. On cost of deposit, we are expecting that our cost of deposits will come down this quarter. And we have repriced both our savings account. We've repriced our deposits. And we do see that we will be reporting a few basis point drop in cost of deposit when we finish this quarter.
How are you managing to do that? Because all the other banks that we speak to, they have gone on to this deposit mobilization spree, right? So if competitors or other banks are offering better terms for deposits, you've managed to reduce your cost of deposits. How do you plan to maintain the quantum of deposits at a lower cost at a time when competition for those funds is increasing?
See, one, I think, to be very honest, the size of the bank is not so large relative to the entire deposit, banking industry. So for us, the 20% growth is like, a 6 to 7,000 crore of growth of deposit in a year, which is a very nominal sum when you look at the entire size of the industry. Second, we are in the growth phase where, we really are opening up new branches. We're adding RMs. We have launched a few new segments, which were never there in the bank before. For banks who have been around for a long time and, they already have 1,000 branches, they open the next 20 is a small change. For us, when we open the 20 branches, it's like a big addition for us. Our segment launches are there, RMs are growing, new branches. We obviously have very good digital answers. We have good servicing capability, new RMs, they're more hungrier. I suspect that kind of foots the bill here. We did find, Mangalam, on the savings account side, there's a very high end of pricing where, a lot of large savings account comes in and just demand a lot of price. We felt in this quarter that we should not cater to that kind of segment. While it does improve CASA, it kind of just, puts you into a lazy habit, which would not be a great culture to carry on with, which we have kind of moved back from. But other than that, listen, for our bank size, getting a few thousand crores every year with 778 branches across 24 states and 24,000 people, I wouldn't put that as a challenge we wouldn't be able to surmount.
Right. Final word from you, Mr. Kanwal, if you can just share a number on this, your cost to income ratio target for the next year.
Okay, I'll tell you what it should be when we become 80% secured. It should be a 52 or a 53%.
Okay, 52 or 53% over the next 2 years. So we will, assume that sort of glide path. Thank you so much for joining in. Congratulations on a good set of numbers. The street likes what you say. The street likes what you've delivered. The stock in a wobbly, weak market up around 17.5%. Wish you good luck for the remainder of this quarter and all of next year as well. And hopefully you will join us when you do apply for that universal banking license as well. With that, we take a short break, come back, get you more on the stocks and markets on the whole on the other side. On halftime report, let's take a look at the F&O setup at midday. And the reason why we're not talking about the frontline indices and the pain in the broader markets is because that's where, your portfolios start to feel the pinch. 2.5% lower for the mid-cap index, nearly 3% lower for the small-cap index. This week itself, both these indices are down 4.5%, 5%. And all of this also tells you the pain in the broader market is more, more internal rather than external flows related stuff. Why do I say that? Because look at the top losers in today's trading session. The number of stocks which are declining, 1:7. We have 7 stocks in the red for every 1 stock which is in the green. and this number is startling. At the same time, the nature of the stocks which are declining tell you problems with earnings. So that is something we'll most definitely keep an eye out on. IndiaMART, weak numbers. ICICI Pru, weak numbers. IndiaCement, weak numbers, even though it is now a subsidiary of Ultratech. Just keep an eye out on Persistent Systems, reports its numbers today. Weak commentary coming in from Oberoi Realty in the conference call. And Kalyan Jewellers has problems of its own when it comes to promoter pledge, etc. If you look at the way the frontline index is positioned right now, there is some action on the 23,100 call for a premium of 50 rupees, telling you upwards of 23,150 we might face resistance. At the lower level though, put writers are active, close to around 1.3 crore shares, 1.4 crore shares at the 23,000 level itself, a level that we breached in yesterday's trading session. But they're hoping for some support coming in at 22,950 thereabouts, were we to break that 23,000 mark once again. Those who are selling the 23,100 call and the 23,000 put are expecting that the range would be close to 22,900 to 23,100 itself. IndiaMART, the 9% decline may take the stock into FNO ban today with the kind of open interest jump that we've seen. And just keep an eye out on Angel One, Kalyan Jewellers and RBL Bank. They're mildly above the threshold from which they get out of FNO ban, and we still have about 2.5 hours of trade left. So if there is more open interest unwinding on these stocks, then maybe these stocks will get out of FNO ban. If not all of them, at least one or two of them today. We'll watch out for that data.
It'll be interesting to see what happens when Kalyan Jewellers is out of the FNO ban. Mangalam, thank you for that. But just pull up Kaynes Technologies. There were flashes at the bottom of your screen just before we went to Mangalam on the FNO setup of the afternoon. The board has approved 1,600 crore rupee fundraise through the QIP route for Kaynes Technologies, and that stock is down at the lowest point of the day, 8.5% lower. Remember, it took a battering yesterday courtesy the sell-off that was seen in Dixon Technologies after its results, and another 9% gone in today's session as well. So the stock now is down 25% from its peak, which was around 7,800. The stock now at 5,400 is Kaynes Technologies. Take a short break. Focus on Cyient DLM on our Insight Edge segment on the other side. Stay tuned. Welcome back. As promised on our Insight Edge segment, we are putting the spotlight on Cyient DLM, among the top losers in the broader markets after its earnings, and Upasana is here to shed more light on that. Upasana.
While the company has reported a weak set of numbers, the company reported strong revenue growth, but margins and PAT was impacted mainly due to higher employee costs, other expenses, and a steep fall in other income, making it a operationally weak quarter. Now, coming to revenues, it saw an uptick of 38%, while the margins were under pressure, almost 290 basis points at 6.3%. PAT saw a degrowth of nearly about 40% on a YoY basis. Now, management joined us today morning to discuss about the Q3 results and the way forward, and the company has retained its strong outlook for aerospace and defense segment. It has highlighted that certain program experienced timing shift and order pattern for select items remained uneven, impacting the overall ordering activity of the company. Now, company sticks to its guidance of 30% top line CAGR growth, and on margin front it says that the large defense-related order impacted margins, and these orders will be completed in Q4, and margins are expected to improve Q4 onwards. Company is also confident of achieving double-digit EBITDA margin guidance by FY26. Listen into this.
We've tried to provide just some rough guidance, not specifically years, but just more of a CAGR over multiple years. We like to see it about a 30% growth. I think the year before we had over 43%. This year will come in less. Next year is still forming. So still over the midterm, that 30% year-on-year growth is where we like to be, which is in line with the sector as well. But again, that will vary quarter to quarter and even during parts of the year. Regarding the bottom line, we look to operate the business at about a 10% EBITDA, and that is a solid, really a solid baseline for the business that will, that can vary again quarter to quarter.
All right, that is the management of Cyient DLM. Their commentary was optimistic, but the street did not like the third quarter numbers. The stock lower, as Upasana pointed out, currently at the low point of trade. Take a short break, come back on the other side. We bring you snippets from our exclusive conversation with the Novartis CEO. All of this from the sidelines of the World Economic Forum Davos Summit. Coming back, a couple of stocks are fighting for the frontline index. We have Infosys, which has moved to the high point of trade. IT has actually been a general outperformer in today's trading session. Infosys, by virtue of its weight on the index, is trying to support the Nifty or limit the decline that we're seeing. Maruti Suzuki is the other one, which is picking up pace currently at the high point of trade. It's been a decent month for that stock, up almost 11% And the third one we're looking at is HDFC Bank. Now, remember, this has the highest weight on the Nifty, along with the Nifty Bank as well. So any recovery in HDFC Bank is something that would support the frontline indices. Can't say the same for the broader markets, where now the mid-cap index is again at a fresh low of today's trading session. Almas, you wanted to say something?
No. I was just trying to, since you mentioned the broader markets, I took a couple of names that I wanted to highlight. The companies coming out with results today. Polycab is one of them. That too is down to the lowest point of the day, 4.5% lower there on the stock. And the other one is Persistent Systems, and that is also now to the lowest point of the day, 6.5% lower on that stock. Remember, Persistent was at the was an outperformer in 2024 on the Nifty IT. But over to Davos then, and the exit of the United States from the WHO will be a big blow for the organization, and that's the word coming in from Vas Narasimhan, who said this on the sidelines of the World Economic Forum, and he also spoke about the status of the Novartis India deal. Listen into a slice of that conversation.
Before I talk to you about Novartis, I have to talk to you about what's happening in the world today, and President Trump's decision to withdraw from the WHO. Not entirely surprising, but a big step back as far as healthcare is concerned.
Yeah, I think it's consistent with the general pullback from multilateral agreements. You saw also the actions on OECD, on the climate pact. I think it certainly will have an impact on the WHO, given how large a funder the U.S. government is. I think what will be critical is to find ways for the most critical health programs to continue, whether that's monitoring for future pandemics or also critical programs in infectious disease in developing countries. I think it can be managed. It was managed in 2020, but it certainly is a blow to the WHO.
But what about India? The last time we spoke, you had announced your decision to review Novartis India. You have almost a 71% stake there. Has there been any decision, or are you closer to taking a decision on what happens there?
I think we're not closer. We continue the process. I think the process is ongoing. I mean, our commitment to India is clear. We'd have 10,000 people in Hyderabad, fully integrated, as you know, into our, you were there with me, I think, last year in our operations. And I think from a market standpoint, we continue to watch and wait to see how the Indian pharmaceutical market will evolve. It's still a relatively small market versus our other global markets. I think hopefully as the government continues to invest in healthcare, continues to invest maybe in new drugs and new innovation, that market will come. It's probably still 10 years out, realistically. I think it's still some ways to go.
Still 10 years out, you think?
I think so. I think when I look at the scale of some of these other markets, if you think about Novartis'
China and
scale,
Japan?
Novartis is a $3 billion business in Japan, a $4.5 billion business in China, and a $500 million business in India. So I think that gives you a sense of the scale of difference. And so I think that will take time, but I think it will come. I mean, I recently spent 2 weeks in India, and I really get a sense of the energy, the booming middle class. I think it will come, but it's going to take some more time.
So what's the headline for 2025 for Novartis?
I think continued strong momentum and continued interesting innovation with hopefully some big breakthrough discoveries along the way.
And you hope to get the India deal done in 2025?
I hope so, but you know how those go. Let's see.
How many people are you talking to at this point?
Yeah, I don't know. I should probably get an update. But what I can definitely say is our Hyderabad center is booming, and we're incredibly proud of it. And I think that's going to continue to be a place of investment for us.
All right, Hyderabad is booming and will be a place of investment for Novartis. What we'll do is take a short break, come back on the other side, focus on all things commodities, where Manisha Gupta joins in.
Welcome back. And Evandro Gassi is President, Brazilian Sugarcane and Bioenergy Industry Associations. And Andrew, hi, thank you so much for joining in. And ethanol clearly has been a buzzword now in India, but Brazil plotted it, piloted it, championed it. What are the numbers that we're looking at now for production and blending when it comes to Brazil to begin with?
Well, ethanol is an important part of our production in Brazil. We are producing now 33 billion liters of ethanol used in our cars. And as you are experiencing here in India, we have a blend in the petrol. In Brazil, we have 27% of ethanol blended in gasoline. We will arrive in 30% the next months. And we have pure ethanol used in flex fuel vehicles.
Also, how would you look at Indian growth in ethanol with its targets now preponed, 18% done already in the month of December?
Well, I think that India is I think that India is having a wonderful development here in terms of ethanol production. I am here at the Bharat Mobility, one of the most important expositions about mobility in the world, and I can see here flex fuel vehicles able to use up to 100% of ethanol, and this will be very important for sugarcane producers and for ethanol producers here in India, because with the production of ethanol, you don't have a necessity to have all the incomes of the sector from the sugar.
Mr. Kasi, also, how do you see India and Brazil trade relations? Because the numbers in 2024 have been quite an improvement. How also are you looking at knowledge sharing when it comes to biofuels between the two countries?
Oh, we have the best relations between Brazil and India. Brazil has 40 years of experience in ethanol production and consumption, and we are pleased to share the experience with India and see how fast you are developing the technology and the market of ethanol here in India. I can't believe in what I am seeing here. 5-6 years ago, we had nothing about ethanol in India, and now here in Bharat Mobility, I can see the development. I think that in the next course, after 20% of blending, because government of India is developing a roadmap for further ethanol blending of 20%, I think that India will be one of the best examples of sustainable mobility in the 21st century.
I also want to draw your attention to the Global Biofuel Alliance, which was launched between US, Brazil and India to increase biofuel production and demand. You are playing a pivotal role in that, but since that has been done, where would you say we are standing now? What kind of progress has been made onto this one?
I think that the Global Biofuels Alliance was a wonderful idea launched by Brazil, United States and India here in G20 when India had the presidency of G20. The schedule now is running a lot because all the bureaucratic and diplomatic assets are being done. India has the Secretary of Global Biofuels Alliance, and we are seeing a lot of countries understand the importance of ethanol and wanting to achieve the same target. The example of India, the leadership of India in ethanol, is getting Indonesia, Thailand, Philippines, South Africa, and a lot of countries in the world for this pathway with biofuels, with bioethanol.
Mr. Kasi, a final question, and then how are you looking at, as you said, India has made leaps and bounds when it comes to ethanol usage and flexi-fuel cars that you have seen in Bharat Mobility Expo. How would you say Brazil is guiding, sharing its own experiences with India at this point?
I wouldn't say that we would or could guide India, but share experience. What we have in Brazil is first a high-level ethanol blend in gasoline. This is wonderful for cars, for people, and for environment. More than this, Brazil has developed the flex fuel vehicles able to use up to 100% of ethanol and up to 100% of gasoline. This experience is being showed here in Bharat Mobility, the Auto Expo. And what we are showing now to Indian government and Indian private sector, first is the measurement of carbon intensity of ethanol. How to measure how many grams of CO2 equivalent you have in each liter or each megajoule of energy produced by ethanol. The second point, it's very important to have tax differentiation. We can't have the same taxation in ethanol and in gasoline, in petrol. You must have an important difference because while gasoline has emissions of CO2 in high level, in case of ethanol, you have up to 90% of reduction in CO2 emissions. Then I think that tax and carbon intensity measurement are the next steps that India is looking at, and this is very important for the program.
Mr. Kazi, thank you so much for joining in. Well, an important point being made that India needs to look at tax differentiation when it comes to ethanol and petrol being used in cars. And second point, of course, Mangalam, as he said, that you have to look at your carbon intensity. That's an important thing that India needs to start measuring.
Absolutely. The world is looking at carbon neutrality here. So carbon intensity extremely crucial. But what's also extremely crucial is that the mid-cap index is breaking those important levels, very close to that 52,500 mark, down about 2.5%. At the low point of today's trading session. And some of the stocks which are seeing a fair amount of sell-off. Pull up something like AB Fashion and Retail. Did well in the morning. From there, it's given up around 3.5% of gains. So currently sitting at the low point of trade. First Source continues to struggle, down about 6% now at the low point for that one as well. Polycab ahead of numbers, down 5%. InfoEdge down about 4% as well. So mid-cap IT not doing particularly well. AB Fashion Retail selling off, and a bunch of other stocks as well sell off, even as large-cap IT and the frontline index holds on around the flat line. Take a short break, come back on the other side. Business Lunch takes all the market action ahead.